Let me ask you something. Banks hold your money. They give you debit cards. They keep your cash safe. But if banks pay you almost nothing in interest, how do they make billions of dollars every year? Because banks are not just places to store money. They are businesses. And once you understand how banks really make money, you stop using them blindly and start using them intentionally. This is something most people are never taught. The big misunderstanding about banks. Most people believe banks make money by simply holding money for customers. That sounds logical, but it's wrong. Banks do not make money by storing cash. Storing money actually costs them money. Security systems, employees, technology, buildings. If banks only held money, they would lose money. Banks make money by moving money. Your deposit is a resource. What happens after you deposit money? When you deposit money into a bank, you are not just a customer. You become a lender. Legally, your deposit becomes the bank's money. The bank owes you that amount, but they can use it now. Banks take deposits and lend most of that money to homeowners, car buyers, students, and businesses. This is called fractional banking. The bank keeps only a small part in reserve and puts the rest to work. The core business. Interest spread. Here is the simplest version of the banking business. Banks borrow money cheap. They lend money expensive. For example, they might pay you 0.3% on savings. They lend mortgages at 6%, credit cards at 18% or more. That gap is called the interest spread. It may not look huge on one loan, but across millions of loans, it becomes enormous. This spread is steady, predictable income, and banks love predictable income. Loans are the real product. Banks advertise checking accounts, savings accounts, mobile apps. But those are not the real product. Loans are the real product for them. Loans create interest income, long-term relationships, recurring payments. A 30-year mortgage means 30 years of interest. That's why banks work so hard to get customers to borrow responsibly, and sometimes irresponsibly. Credit cards, a profit machine. Credit cards are one of the most profitable tools banks have. Why? Because many people don't pay balances in full, miss payments, carry debt for years. Banks earn from high interest rates, late fees. A $1,000 balance can earn a bank thousands over time. This doesn't mean credit cards are bad. It means they are powerful, and power always benefits the one who understands it most. Fees. Small amounts, big scale. Banks also earn huge money from fees. Many people don't notice them because they seem small, but across millions of customers, fees become billions. Overdraft fees alone generate massive profits. Banks design systems where forgetting, rushing, or misunderstanding costs money. Banks invest with your money. Banks don't just lend, they also invest your money. They use deposits to buy government bonds, invest in low-risk securities, manage large portfolios. These investments may return only 2 to 4%, but when you're working with billions, small percentages become huge profits. This is quiet money. No ads, no excitement, just scale. Why savings interest stays low? People often ask, why does my savings earn so little? Because banks don't need to compete hard for deposits. Most people value convenience, familiarity, and trust. They don't move banks often. So banks keep interest low and rely on habit. Your savings are cheap capital. That's great for banks, not great for savers. What this means for you. Understanding this changes your behavior. You stop thinking, the bank is helping me. You start thinking, the bank is a tool. Banks are not evil. They are efficient, and efficiency rewards awareness. When you understand how they profit, you can avoid unnecessary fees, limit high-interest debt, use credit strategically. How smart people use banks. Smart people don't fight with banks. They use them correctly. They keep emergency cash available, pay off credit cards monthly, avoid lifestyle debt, invest money elsewhere. They let banks handle transactions, not long-term wealth. Banks are great for movement of money. They are not designed for wealth creation. Banks make money when you don't understand the system. Once you see how banks really work, you stop being surprised by fees, debt, and low returns. And you start making smarter decisions. So here's the question I want you to think about. Are you letting your bank quietly profit from your habits? Or are you using the bank as a tool to support your goals? That awareness alone can change how you handle money for life.